Hello everybody, I hope you are doing well. So this is our next video for the day. So I'm doing this analysis because I think that long term we'll have some good buy opportunities on the gold. All right. I know that some of you have already seized the opportunity when it broke the one when it did break this level, like the 1000 1360. The level has been tested, like more than 6 times. It has been rejected more than 6 times, and eventually it went through. And as it went through, price did did reach 1750 at its highest. So the important thing about gold and about investing long term in precious metals is that you need to understand that I'm not doing any kind of fundamental analysis. My analysis is purely based on what I see. And what I see here is that markets are about, gold, especially gold, is about to explode higher. So it will explode higher, I don't know when. And since you are going to be investing for the long term, you should understand that gold is not likely going to lose value. There is no 100% no risk-free investment, and I can't guarantee it. But what I can guarantee is that based on technical analysis, you have more chances that gold is going to go through and retest the high, the highest point that it has reached in 2011. So given what we have here, what we can say is that gold is a good investment, especially for the next 2 years, 3 years, even 5 years. So if if you're still hesitating and you're still thinking about if gold is a good opportunity, you can see it clearly on this chart. What can you see in this chart? You see that a corrective move has been broken, and this is like a flag. The flag has been broken. It has been broken in 2019. So even before the coronavirus crisis. So it did break before. Why? Because it must be that why I can say why, because I'm not a fundamental trader, so I rely solely on what I see in my charts, because charts tell you they tell you the whole story. So you don't need to look to look any further. There are many there are different opinions, but they are just opinions of people that say that they prefer to use fundamental analysis, which is very which I has nothing against. But I'm just saying that my analysis is purely based on charts. And what is this chart saying? It's saying that we broke a major resistance. We broke a major resistance in 2019, and since then we have been gold price has been rising, even during the coronavirus crisis. It did break it. It did correct, but it was just a correction. Why? Because the bullish potential is very strong, and we can clearly see it here. We can clearly see it here. This is a weekly chart, but what can we see here? We see that even if price did break and did correct, it's still just a correction. And another thing that we can use just to prove this point, a technical, like a technical indication that this was not, like a big deal. I mean, the down move that happened, like during the coronavirus crisis, during like March, during like the second week of March. It wasn't a big deal because, as you can see, price did stop at 38 point here. It did stop at 38.2, so it did retrace at 38.2, which is like like a normal, or like a normal retracement level for a bullish trend or bearish trend, for a trending price. Let's say when price is trending in either direction, if like it doesn't go like beyond, I mean for a bullish trend, if it doesn't go like below 61.8%, means that like the trend is still intact, and buyers still have the upper hand. Okay, so let me just get rid of this. Anyways, so the second thing that you have to understand, and is that the big retracement that we have, I mean the big correction that we've had here since since 2011 is finished, right? So the correction that like where price went down and then corrected, and then like it, and then like tagged this low here at 1000. There is a potential that this correction is like has ended. Why can we say that? So technical analysis again. What does technical analysis say? Says that if we have lower highs, like a succession of lower highs, means that we are in a bullish trend, right? So we have like we have until now just like higher lows, like swings, like swings high. We just have swings high right now. Okay, so this is just to say that like we are in a bullish trend. And the last but not least technical indicator is just the chart. So the chart is the best technical indicator. What do you see left? You see a bullish trend, all right? So you see a strong parabolic bullish trend until here. So when you put things in perspective, you realize that like even though this move has been aggressive, and it did like pull back to like almost 1000, but like in the grand scheme of things, you realize that like it was just a correction, right? This is just like a correction, and the long-term the long-term prospect for gold, if we use again Fibonacci, which is a tool, I love this tool because it gives you so much information, and it's so like precise. And let's use it here, and let's put things in perspective. So what did we have? We had a correction. Our correction did stop at 50%. So all this move down that went from like almost 2000 to 1000 it was just a correction. So what do we have now? We have like price did correct, and it did range for a couple of years, but eventually it looks like like it's taking like the trend is being resumed, right? So next stop for price is to go and tag this high, all right? So it's going to go and tag like the 1900, like previous high. Why can we say that? We can say that because like we are well past the 61.8% of Fibonacci level, which is to me or not just to me, but this is something that is widely known, you know, like among investors and technical, I mean, in technical analysis and among traders. So when price goes, you know, like goes past, you know, like 61.8% Fibonacci retracement, it means that maybe we are not, we don't have a retracement, you know, like anymore. Maybe, you know, like things have changed, and maybe we have a reversal or a continuation, like in this case, because the down move, the down move is not yet, I mean, the down move is not yet, you know, like invalidated, or it's still there. It can still, you know, like fall. It can still fall, but chances are, given, you know, like the shape of the move and the strength of the move, and given the fact that, you know, like we were able to break and aggressively break, you know, like the 1360, you know, like level, and we didn't even pull back to that level, you know, like since, you know, like since June 2019, and given the fact that we tagged already, you know, like the 78.6% of Fibonacci, means that, you know, like we are very close, and we have a very high probability, even in, you know, like even in the scenario where price would you know, like pull back, would pull back again, you know, like before, you know, like before going up. But we still have this possibility, all right? So we still have this possibility, and then we can have, you know, like here a flag, and after the flag we could have, you know, like price go and tag the high, and then, you know, like sky is the limit. Because so this is it. So if you need more information, I'm going to do, you know, like another, I'm going to do just another, you know, like video tomorrow.